What is going on with gold? Gold bugs are pulling their hairs out. I'm not going to demonstrate that. I don't have that much hair left. Super hot inflation data. Gold price does nothing. What are the reasons behind it? That's what we're going to look into. We're going to look at all the factors that are influencing the gold price short term, what they mean for the gold price short to mid-term. We're going to look at a really important long-term factor, and we're going to look at the charts and the technical levels that we need to pay attention to now to understand where the gold price is going to go short to mid-term, because long-term we're going to go much higher in gold. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks and month. Welcome to Hot Trades of the Day. My name is Daniel Wilhelmi and we're going to jump right into it because we have a lot to talk about. Man, tough times for the gold bugs, like this guy. So yeah, this doesn't look great. And that's kind of what I told you in the past videos, in the past weeks. Silver looks better than gold. And we can see very easily here why. Yes, we made higher lows in gold. That's good. But we have not made higher highs. And contrary to silver, which has made higher highs, and which is also above the 50-day moving average, gold is still below the 50-day moving average, the purple line that you see in the chart. And as you can see, now gold has the problem that the 50-day is really pressuring down on gold. But you look at the fundamental news and you say, that makes no sense. We got red hot inflation data. That should push gold up. Yes, that's true. But again, and we're going to go to the oil price, and if you watch this channel, you know what do we need to pay attention to? We need to pay attention to oil and to the dollar short term. And if you don't know what I'm talking about, hit the subscribe button so you don't miss any of the videos where I explain this. Here is the, actually, you know what? Let's use this one. There we go. This has the beautiful Wilhelmi Picasso in it. WTI, and what do we see? Is establishing itself around $100 a barrel. It's going sideways since March in a wide range, but it's going sideways at an elevated level. And again, as I said, we are now $100 is kind of becoming the new normal. This is now the third, we're entering the third month, so we're basically 2.5 months in, where if you look at it, the majority of the time, where's 95? Here we go. The majority of the time, we have been higher since, we have been over $95 and higher of these 2.5 months. There was a short period here, and there was a short period here, and then some quick intraday sell-offs, liquidity grabs. So, what does that mean? Inflation is going to stay hot. Just look at the wheat prices. Broke out. Oh, wait. If you watch Saturday's video, I talked about, hey, pay attention to the wheat prices. Look what happened. Breaking out. So inflation is going higher. Things are getting more expensive. And that means probability of rate cuts, short term, basically zero. Rate hikes, possible. I don't think it's very likely with the stock market where it is at. I think Trump is happy with that. Yes, the high inflation really hits the lower end of the K-shaped economy, but since when has Trump ever cared about that? So, rate cuts are coming, but they're not coming short term. And that's what the market was trading for. We look at the oil price, we can clearly see that the 50-day has now become the line that you need to pay attention to. We broke above the 50-day in January. And if you remember, I got bullish on energy stocks and oil at fall, winter last year and at the beginning of this year. And look at this. We tested the 50 and then we tested it here, undercut it, liquidity grab, but it held. And then three times actually in the last week. So if you want to go nuts, okay, and you want to trade the oil price, I'm not going to do it, but hey, if you need the adrenaline kick, if that new Punisher movie on that, Disney Plus didn't do it for you, then the 50-day moving average, we go below it. Last hour, it looks like we're going to close below it in US trading. That's where you would get short on oil. I'm not going to do it. I wouldn't recommend it. But that is the play. Because the 50 days clearly the mark that is getting defended and that's pushing up the oil price. And it means it's pushing up the oil price. So don't be surprised if oil goes higher. Could very well happen. Either way, it doesn't matter for us in gold because, well, it means inflation data is going to stay hot, which long term is good for gold, but right now, short term, it is not because that is what the gold price was trading for. Then let's take a look at the dollar. Ooh, there's a development in the dollar that's really interesting that nobody's talking about. That downtrend that started on March 30th in the dollar, we are breaking it. We're fighting with the 200. We break the 200, we're definitely going to go up and test the 50-day. And that is the reason, with this possibility, that is the reason why gold is not moving. Remember, May 31st, that's where the downtrend, the most recent short-term downtrend in the dollar started. Now let's go to gold. By the way, pardon me, March 31st. I'm an idiot. I'm sorry. So March 31st is where the downtrend in the dollar started. Here's March 31st, and you see the run that we got in gold, right? And then it kind of fizzled out, and that makes sense because, well, that's when the majority of the down move was over, and we kind of started to go sideways. So if we break the 200 in the Dixie and jump up, that will put pressure on the gold price. And that is the reason why gold is kind of just hovering around sideways because everybody's waiting. What is happening? Are we going to get a significant breakdown below the 50 in oil? Even then, we're probably not going to have a severe correction in the oil price. But the more interesting signal, the more important signal right now is what's happening in the dollar, right? Is the dollar going up? And that's what's playing out in gold right now. In combination, and this is really important, and I'm going to show you an important chart on that in the next days, in combination with basically zero interest from hedge funds and institutional money, which I've pointed out here for a long time. Why is that? Well, because we don't have a trend in gold. It's kind of going sideways, right? Right now, we're basically on the 14th of May, we are where we were on January 20th. So basically 4 months ago. So they're not investing. We need major breakout signals in gold to get the institutions back on the long side. Now, this is what's going to lead to the next rally. I get often asked, hey, where will the buying come from for gold that will push gold higher, right? The retail, the gold bucks like me, we're in. We would add to our position on weakness, right? But we're in. The commodity insiders are in gold. The central banks are buying, and it's still not going up. Where's the push coming from? It's the institutional money. So let's look at the levels that we need to pay close attention to now for gold. And that is, let me switch to the 1 hour because that makes it very clear. That's a lower time frame. Usually we don't go below this, but this one shows very clearly So this goes back to, let's start with the beginning of May. Here we go. This is the 1 hour chart of gold, and you can clearly see, let me take this off because that confuses people. Here we go. You can clearly see this upper end of this support zone, and we absolutely nailed defining the support zone. That is the first short-term line of demarcation. You can doink, 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 doink. Last 2 times, last Wednesday, we didn't even come back down. But this is the line. We break below this line, we go into the midpoint, but more likely we're going to the low end. So that's about $100. Again, this is very short term, but I just want to show you what do we need to pay attention to. It is this line. So pay attention to around 4,660 to 50. We go below 4,650, we're probably going to see a pretty fast, harsh sell-off. And then the second one, we already talked about it. So this is the line that I just showed you. Actually, let me add the 50-day and the 200-day because those are important. Here we go. So we go below this line right here. We're going to sell off $100, basically correcting this big move up that we had. And then we know, I've told you this before, if you missed the video, hey, subscribe button, takes you 1 second, might make you money. Best second you ever spent in your life. 4,500, we know that is the short-term line of demarcation for the institutions that are invested in gold. We go below this, we're probably going to get a lot of stops triggered, and we then would go down, and by that time we'll probably be at this upper end with the 200. So 4,380 is the target zone that I would define right now for the downside, which is about $300. So that's definitely not nothing. That is, what is that? 8%, 7-8%. Let's run this down here real quick. Why do I do math on my hat? I can do it like this. Yeah, 6.5%, about. So we are starting to get a better picture for gold. It's kind of like when you and your wife go to the gynecologist, right? And you get the ultrasonic, and you get like the first ultrasonic, and the baby, I don't know, looks like a diamond ring. Doesn't really look like any human being, right? But then with the next ultrasonics and more, it develops, as you can see the clearer picture. We're starting to see the clearer picture. So now we know what's on the lower, what we need to pay attention to on the lower end. And that was more important because on the upper end, nothing has really changed. What is important on the upper end? The 50-day moving average breaking this, and then this, I would say, minor resistance zone. But we close above this. So we close 4,800. We got the first big green flag. The second one, I told you this before, is closing above this red purple line right here. So 4,850, that's the big one, because then we would make a higher high. Then we would get the scenario that we have in silver already, where we already are above the 50 and we already have a higher high. So why is silver moving and gold is not really quick? And then we're going to look at the big chart that you need to pay attention to. And the reason why I believe that we're going to go much higher in gold. Now, the reason for silver is the silver market is smaller. China is importing silver. So they're sucking silver out of a market that already has been in deficit going into its 6th year now. So you look at the COMEX, you look at London, Shanghai. The silver reserves, they're getting drained. And we have the short squeeze situation. So anytime silver is a little up move, right? Gets a little better technically, like jumping above the 50-day moving average, making a new high. Shorties are eager to cover their shorts. So that's why silver has the unique situation that gold just doesn't have. But here's the chart that we always need to remember. And that's the long-term chart of the dollar, We just talked about the dollar as one of the driving forces for the gold price. Okay, let me switch to the weekly here and zoom out. And if you're a long-term follower of this channel, you know this chart already. And if not, again, the subscribe button, that is what will make your life a lot better. I'm just pretending it will be. I hope it does. Okay, so we're switching to the monthly. This is the ultra long chart of the Dixie going back to the 90s, so 40 years. And as you can see, the dollar is clearly in a long-term devaluation downtrend, and we're going in these big waves, right? So dollar depreciation and the dollar appreciated basically in the past 20 years, basically since the financial crisis, which makes sense. But here's the big one, right? Here's the big one, and that's this uptrend. And as you can see, this is kind of what we're running into right now with this sideways action that we have seen in the past year, year and a half, which in my opinion is a bear flag, down move, A wave, B wave, C wave, and then if we break below the 200, okay, then the dollar's really cooked and we're going to go down to, let's see where we are, 84 cents by that time, probably closer to 82, 80, 81. That's the chart that you need to keep in mind. So, and we know this is coming because if the dollar continues to go sideways, and again, I'm going to switch to a weekly, that makes it a little better, we will eventually hit the uptrend. And then it's decision time for the dollar. And if we lose this uptrend, and I believe we will lose this uptrend. We are already way below. This is the 200 weekly you're seeing right here. And you see how that's already curling over. This is the last time we had a big cut of the 200 weekly to the upside, big time up move. Downtrend, look at the big move that happened immediately when we broke significantly below the 200 weekly. And since then, sell-off has continued. Now, in my opinion, bear flag. So, you want to know what's going to move the gold price long-term to the upside and why I believe we have a large upside in gold left? This is it. It is this long-term devaluation of the dollar in combination with higher inflation, in combination with, and that's important, and I'm going to show it to you right now. It's one of those graphics, really good graphic. Massive expansion of, here we go, the global money supply. Really, really good graphic by Azuria Capital. Shout out to you guys, great job. And look at this, what has happened basically in the past 2 years. The insane increase in global money supply. And now you understand the rally in the gold price too. It's closely correlated to the money supply. Now, will this stop in 2026 with a Trump government that wants lower rates and governments around the world that need to stimulate the economy with inflation going higher? I don't think so. I think rather a continuation of the increase of the global money supply is in the cards. And that is good for gold. That is it for today. Have a great day. We'll speak tomorrow. I'm in Frankfurt tomorrow, so tomorrow's video will be coming to you from the Deutsche Goldmesse. And if you see me there, say hello. Let's have a chat. Bye-bye.